This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Everyone's been worried about a recession, and the Federal Reserve hasn't been doing anything to tamp down our fears of that. In fact, I think they've been trying to tamp down inflation expectations by coming out with different board members who say they're going to aggressively or somewhat aggressively raise interest rates. And Vice Chairperson Brainard is going to share power with Jerome Powell on deciding whether the interest rates go up or not. And they're going to increase. They'll increase like another 2.25% in May. And some think that it could go to 0.5. There's only like a 25% chance of that in my mind, because I think Jerome Powell tends to be somewhat of a dove. Although Brainard and different board members of the Federal Reserve have been very much talking like hawks, being very hawkish about raising interest rates. The Dow Transports went down dramatically one day, and this is all shipping and trucking and logistics services that get goods to consumers. And when they start to go down, that's a warning sign of recession. And one day, the stock market went down dramatically, and especially the Dow Transports, because they took it as a warning sign that shipping and trucking stocks all tended to go down. I was using Zim Integrated Shipping. It's a Israeli international ocean liner shipping company. Zim Integrated Shipping is a container ship. They have like 130 vessels, and they started to go down, and I got out of it because I heard about this headwind with the transports. So it took me some time to get out of it because the statistics were so favorable on it. Their price to earnings was around 2. I mean, holy cow, it's a cash machine. But there was the transports went down, and all of these ocean liner container ships tended to go down. And then the Israeli government slapped a 25% tax on the dividends paid out. So that's a 25% taken out of a huge dividend. So it just wasn't worth it anymore. It still looks good on statistics. I think a person can make money with it. But for me, I'm on something like that. It tends to be cyclical. And when you have the transports going down, that's a warning that the cycle is getting ripe. And I think we're due for a pullback because of the transports going down, or at least the signal that it's sending. So I got out of Zim. So I've talked before about stocks that probably tend to do okay or do well with inflation. And the metals, they've been flat to slightly down, of course, because everything is kind of recently pulled back. But they will return, and they will do well. I even have thoughts of buying gold, for God's name. So I think they're going to hang in there. But today I want to focus on energy, and not so much the oil stocks, because there's hundreds of oil stocks, and you have your pick of those, and a person's going to do okay with those. I picked Chevron. Its symbol is CVX, and I picked it basically because Warren Buffett picked it. And if it's good enough for him, it's probably good enough for me. So that's my one oil stock. But with this recent shakeout with stocks, I've been kind of shook, and I'm being very cautious. When I buy stocks now, I'm going to buy alternative energy type of stocks that are not oil stocks. And today I'm going to talk about natural gas stocks that I've been looking at. Natural gas it's cleaner than oil by far. So it tends to be a good transition fuel. And it's something that I don't think hurts the environment, not as much as oil, and surely not as much as coal. And it's a good replacement for those. It's a transition thing. In inflationary times, with interest rates rising, you want to buy more commodity oriented things, more commodity oriented stocks. And one of these is United States Natural Gas Fund, which is a commodity pool fund on natural gas. And if we look at the 1 year chart, we can see that it has the classic cup with a handle pattern. You know, it's been up and then it went down and it stabilized, and now it's going up to new highs. And I've found that pattern to be very bullish, at least the times that I've played it, which is many times, more than I care to count, to tell you the truth. So I think this is being driven by a number of things. The main thing is that Europe has decided not to get their natural gas in the future from Russia, and the United States is going to be sending liquid natural gas to Europe, especially to Germany, which is Russia's main customer. So I think this fund will benefit. It's treating natural gas as a commodity and using the stock market to do that, in my mind. So I think we have a clear path ahead for quite a while. The ETF I like in this area is First Trust National Gas. It's an ETF. Its symbol is FCG, and it has gone up steadily, as we can see from the chart. It has occasional downtrends, and it dips down, but then it goes back up. And I think I see two cups with a handle on this particular increase in price over the last year. So for those who like ETFs more, it also pays about a 1.82% dividend if you like that sort of thing. So those are my two favorites. Be sure to like and subscribe so that you receive future videos, and thank you for watching. And I will plan to see you in the next video. Next time, I'm probably going to talk about uranium. Nuclear power is needed to replace oil more economically. And there's a number of features that are going to make it safer, which I will go into in my next video. Thanks for watching. I will see you in the future.